What is up, you guys? Welcome back to Young Money Investments. Welcome back to another episode of the channel. Today, tonight, we are filming out here in like the dark. Like, I don't know if you can see this. Like, we're filming out here in the dark. The setup is actually out here in Idaho. I am on vacation, but even if you're on vacation, you still got to work, and we got a lot of stocks that we want to talk about today. I want to talk to you guys today about my long-term investment account. Now, you probably go, Cameron, I knew you had a long-term investment account, but you don't talk about long-term investing very often. My philosophy, my personal philosophy with long-term investing is you need to be diversified. It's great to swing trade. It's great to day trade. I think there are certain companies that I can see a lot of long-term investment or long-term potential in over the long run. And yes, it's not as sexy. Yes, it's not nearly as exciting. But overall, I know these companies are going to do well, and it's much better to me to put this money into these safe investments and instead of leaving it in a savings account or putting it in something else. I love the stock market and I believe in a lot of these companies. So I want to talk to you about a small account. I want to talk to you about how much I have in it, how much I have in each of these positions, and why am I invested in specific companies. That is all today. Yes, today on Young Money Investments. Oh, and one more thing, you guys. If you've not hit that thumbs up button yet, that's all I ask for is a beautiful, special, sexy, nice thumbs up. If you can hit that thumbs up button for me, that would be great. If you cannot, I totally understand. Watch the channel. That's fine. But that is the only price that I ask you pay. I don't ask for money. I don't ask for anything else. I just ask for a simple little like button. And if you like my channel, hit that subscribe button, hit the bell notification, and we're Gucci. We're good. We're great. Now let's get into the content and let's just roll through this dang thing. All right, you guys. So I want to talk to you, like I said, about my long-term investment account. Now this is one of a few that I have. And like I said, I am very diversified. I am in this particular account pretty tech heavy. I recommend tech stocks. I like tech stocks because if you look at the past 20 years, where there's cats over here, you guys, like there's literally cats. If you can see, like there's cats and they're making noise. They're freaking making noise while I'm trying to do this video. But with that being said, I believe that long-term investing is a necessity. It is crucial in your growth and development as an investor. And there's also a lot of times in life where you don't have the time to day trade or swing trade, and you still should be investing in things because overall the economy goes up year after year. Yes, there are pullbacks. Yes, there are recessions, and I do believe that we will have a recession. I don't see one right now, and I will talk about that at the very end, hopefully. But I think that you need to continually be putting some money aside as a slush fund to find value deals, companies that have sold off because of bad earnings reports, and invest in those. And that's what we're going to talk about right here. So this right here, you guys, is my investment portfolio. This is just one of a couple, like I was saying, and it's a decent size. I'm not going to say it's big. I'm not going to say it's small because some of you in the comment section are going to go, ew, Cameron said that $24,000 isn't a lot of money. That's a lot of money. And others of you are going to go, that's not that much money. I thought you had lots of money. You guys, I know someone's going to say something. So I'm just going to leave it at that. Like, it's just an account, because I got that. In that Robinhood video, I got that comment all the time. So talking about this account here, obviously it's not done. I'm going to go over with you. It's not done great. Over the course of the past year, literally we're at 3.58%. That is a very, very small amount of growth. All time, this account started back in February of 2018, so we're about a year and a half into this account, and we're up only 10%. Now, I want to talk about the reason why this account is at 24,000 and only at a 10% growth. The reason this account has only grown 10% in a year is if you do look at the S&P 500, there has been a lot of peaks and valleys in the S&P 500, but there has been a lot of just basically like very little change if you look at the year chart. It is not fluctuated. Literally, the S&P 500 in the past 365 days is within like less than a percent. I want to say it's within like 0.5% of what it was 365 days ago. So that is the thing, is the markets have been very shifty. There's been a lot of uncertainty, but overall, if you put your money in a year ago, the markets, even if you put it in a broad index fund, the markets are the same. And with that being said, I believe that the companies I'm in are setting me up for some really great growth in the long run. So here, one of the first companies that I have is I have three shares of Amazon, or Amazing Zun, as I like to call them. I believe that buying in somewhere around 1723 is great. That's my average cost basis. Anytime you can get it in the low 1700s, that's great. So I would love to see the share price kind of drop on here. I'm up a total of 4.59%. Like I said, I'd love to add more Amazon to my position, but I'm currently not that heavy in it. This says that I'm on the high side right now. 18% of people are higher than, or I'm 18% higher than the average. I tend to think that's a little fishy, especially because if you go to my next position on here, which I'll talk about one that I'm up a ton. Alibaba, for example, probably one of my best positions. I'm up 27%. Not a large position that I have, and my average cost basis is $138.98, which to me is really good. I have a lot more of Alibaba and a couple other accounts, but if you look at this on the 1 year chart, we're talking about 132 was the lowest you could have bought this. My average cost basis is 139 basically, and they're saying that, look down here, we'll scroll it down. 6% of people, I'm 6% higher than the average price. I find that very hard to believe. That would make it sound like every single Robinhood investor is a perfect long-term investor. And I'm just not believing it, but maybe I'm wrong. I could completely be wrong here. Like I said, I see a lot of value in Alibaba. I see a lot of value in Amazon if you can get it at the right price. Facebook is another one I believe is going to continue to do very well. I'm currently up 19.45% in this account. I have an average cost basis of $154.25. This is one that I bought and really was in pretty heavy previously, but I still should have probably sold at the $200 price point and averaged down and rebought back in. I didn't do that, but that's because this is a long-term investment account. In my swing trade account, I have done that. Another stock that I do want to talk about quite a bit is Cirrus Logic. Cirrus Logic is a company that actually makes audio chips for the iPhones. Apple is probably one of the biggest suppliers for Cirrus Logic. Now, with that being said, I believe that audio, saying things like, hey Alexa, hey Siri, those are going to be very big features that are going to be coming down the pipe in the next 2-3 years. Even sooner than that. It very well could be the next year. We've seen how the Echo Dots with Amazon has done extremely well. I believe that voice recognition technology is going to really be a big player in the mobile and everything department, in the electronics department. And so I think Cirrus Logic is very well poised and positioned to do very well in that arena, and their stock price will continue to soar from that. Now, my average cost basis is good. My average cost basis is $41.03. I'm up about 33%. Again, my position size is not big, $3,200. But overall, from my overall account size, I still think that it's a pretty good size. 13.53% of my account is Cirrus Logic. That kind of shows my dedication and my devotion to Cirrus Logic. Now, as I scroll down, there are several stocks that I'm not averaging very good in. Nvidia, I'm not averaged very good in. Toll Brothers, I believe I'm probably like break even. Yeah, barely finding a profit, even when it popped here on earnings that it was doing very well. I'm hoping that tomorrow we will see Toll Brothers continue to rise and increase. But really, I'm just kind of break even on them. I'm not really doing much good on there. I know Nvidia, I'm getting pounded on like horrible. MU, I know I'm not doing very good on. These are a couple of them that I'm doing bad on. I'm down 15%. Like I said, I'd say I'm heavy tech, and I could probably be a little bit better. But again, this is just one of a few accounts that I have. I wouldn't recommend Micron. These are companies I'm not recommending that you currently get into. US Steel definitely is not one that, it might be a good long-term play right now. But I wouldn't say that's really a big recommendation. I'd say my biggest recommendations are going to be Amazon, Facebook, Cirrus Logic, Tesla, if you can get it at the right price. I do see Apple always as a good little investment. I'm not up very much on that either, 2.94%. So those are what is in my long-term portfolio. Now, one of the things that I really want to caution a lot of you on with investing long-term is to not get hung up on your losers. You're going to have winners and you're going to have losers. Now, the important thing with this is to focus on the long-term. It's okay, as opposed to when you're day trading and swing trading, to average down and buy more as the stock price declines. As long as two things, as long as you know that the share price is actually worth it, it's valuable and it's going to continue to increase over time. You know that the fundamental analysis on this company is leading towards a more positive price. Maybe it's down because of bad news. Maybe it's had a bad PR report. There are multiple things that maybe it missed earnings. There's multiple things that can push a company down that then will make for you, a value investor, to actually have an opportunity to buy that share at a lower price and make more money. And it's okay to be wrong initially in long-term investing, as long as you have the capital to invest and average down. Sometimes I don't average down, and Micron is a great example of me not averaging down. I simply just bought it, and I said, you know what, I was wrong on it, but I do believe that it's going to go up. And I took my licks there and said, I don't want to put more capital into it. I'll hold for the long run and see what happens. And sometimes you have to do that. The strategy for long-term investing is completely different than what you're doing with swing trading and day trading. You need to cut your losses quickly when you are swing trading and day trading, whereas opposed to if you are long-term investing, you will buy, you hold, and you just ride that sucker out. All right, you guys, so that is the end of the video. I hope you found this helpful. If you've not smashed that thumbs up button yet, please hit that thumbs up button, hit that subscribe button, hit the bell notification. If you're interested in my private chat room, my private mentorship, click the link down below. If you would like a free 5-part mini series, I have that as well. And then I have a full-fledged course. Yes, a full-fledged, like 70+ video course that will do everything. There's mosquitoes out here. It's crazy. And if you haven't already, follow me on Instagram. There's probably a link down below or something for that too. You guys, stocks are good. Stocks are super, super good. And I cannot wait for us to continue to kill it here in Young Money Investments. I will catch you, yes, you, in the next video. Talk to you later. Bye.